watching Deal Flow, the CNBC Africa show that brings perspective on M&A activity in Africa and beyond. I'm Erica van der Merwe. The Old Mutual Group continues to tidy up its business holdings and as it simplifies its structures and refocuses on African expansion. Its latest corporate action announcements included the acquisition of a sought-after UK-based wealth management business and the New York listing of its asset management business. Joining me to discuss this are Meintjes from Imara, Reid and Mia Kruger from Kruger International. Welcome. Good to have you here. Steve, a sizable business this, and it seems as though this acquisition of a wealth management business in the UK, Quilter Cheviot, sought after business. If you look at the returns that its previous owners had over a relatively short period, a deal size 585 million UK pounds.
It was a reasonable price, and the announcement mentions it's a highly fragmented industry, which implies there's further scope for consolidation. I must say, it's not an industry where you would want, four players dominating, because I think you need variety. It's very much the spice of life in investments, but they're hinting that there might be more to come.
So Mia, just an indication of how big the business is. It takes Old Mutual Wealth's assets under management up by 20%, and it has indicated that this is sort of the final step probably in its wealth management acquisitions.
Yes, Erica, when you look at the wealth management up until now, before the acquisition, it already makes up around 29% of the sales of Old Mutual as a company, which is significant. So it is definitely an area where they see good returns and that they'd like to expand in. When you look at the acquisition of Cheviot, they're actually moving into a region in the UK industry where they've got quite a good reach in that market. They're very focused on high net worth and affluent. They don't exclude affluent, but they're more focused on high net worth, and it is a profitable business. We've seen that it's come from a private equity stable where it's made some money for the company holding it, and now they've been acquired by Old Mutual. That brings it into line more with the strategy of where the business actually wants to move into.
That gives us some context. We now bring you a quick overview of the Old Mutual Group and its recent history of corporate restructuring.
The insurance and financial services group Old Mutual Wealth's business is set to buy UK wealth management company Quilter Cheviot at a price of £585 million. The deal will enable Old Mutual to offer investment management services to high net worth clients. The purchase will also increase Old Mutual's exposure to the lucrative wealth management market, which is forecast to grow between 6 and 8% a year. Old Mutual CEO Julian Roberts has also expressed the group's intentions to become a major player in African markets, namely in Nigeria, Kenya and Ghana.
Steve, could you give more colour on how appealing the wealth management business is in the UK for Old Mutual? I mean, indications are that it is profitable, it is growing at a healthy pace.
Well, if wealth management implies you're giving advice to the wealthy as to what to do, and of course that would include life products, so I think there's a natural cross-pollination there. And obviously they're growing, the industry is said to be growing at about 6 to 8% according to their announcements, so it's a good place to be.
Mia, have you done some digging around in the numbers, the appeal of it?
Well, I think the fact that they've focused on the high net worth part of the market, where we see, that contributes, or that it actually makes up about 1% of the population in the UK, but it actually accumulates to around 29% of the wealth in the country, and that's really where you want to be focused. So they're focusing on where the money really is. They don't exclude the affluent, which brings to the party another 55% of the wealth in the country. So that kind of gives them the reach to around 80% of the wealth in the country, and that's where you want to be focused. When you look at the numbers from the business, they've got a return on equity of around 15%, which falls in line with exactly what Old Mutual have been saying. They don't want to do any more acquisitions where they don't, actually add to the return on equity, and their range is roughly between about 13 and 15%. So it really fits into the stable nicely.
Steve, what are the risks of an acquisition such as this, which presumably affects the fees and the profit shares that could be earned? And what about competition? You said there is consolidation in the market. What could potentially go wrong?
Well, it was such a widespread of clients, and of course wealth management is not quite the same as institutional fund management. I think there's less of a risk there in the sense that you're offering more than just portfolio management to a wide range of financial advice and services. So I don't think it's quite as risky as that, and it really is in line with the strategy which they've propounded to the market. You know, after many years in the early noughties and so on of kind of wandering around Europe and the developed world, they're now focused on what they want to do, and also, so they've got 4 businesses now. They've got these institutional wealth management and asset management, and or wealth management, I should say, and then the bank and emerging markets. So they've at least now they've got their 4 pillars. Whether global investors would like that kind of mix and match thing is another matter. But certainly that's what they've said they're doing, and they're doing it.
So talking about plodding around Europe, Mia, so as part of this restructuring over the past 6 years or so, what we've seen recently is the selling off of some of its European businesses, Germany, Austria, Poland, and then also this listing of the asset management business in New York. So a real rethinking, and also using that to generate proceeds to fund this new acquisition. But how would you describe this restructuring that's underway?
Well, you know, you just mentioned that they've actually sold off some of their insurance businesses in Germany and in the rest of Europe, and they've come up with quite a bit of a proceed there. When we looked at their latest results, they had quite a big chunk of cash on the balance sheet. So we're not worried that they're in a capacity where they would need to come to the market or anything like that. They've got quite a bit of cash to use and to utilize into getting into more specified and more specific business areas where they want to focus in.
But looking back though, Mia, are you satisfied with the trajectory which Old Mutual has taken? And look, there have been some disasters and kind of backtracking, but on the whole, how would you rate their performance in deal making, in corporate action over the last 5 years?
Well, I think they've done really well. They've come to the market when Julian Roberts joined the company, and they said, you know, they're going to clean out the book, they're going to sell off businesses that aren't core, and they've actually done that. They've gone to the States, they've gone to, you know, the rest of Europe, and they've looked at every single deal that they've made and every single part of a business that they've actually owned there, and seen whether that really fits into what they plan to do going ahead with Old Mutual. And they've gone ahead and they've sold off those parts and those holdings. So they've actually come a long way from 5 years ago when they started this whole restructuring process, and they've moved into very attractive businesses where they can actually, focus on what they really want to do. So I think they've done quite well in what they've said they're planning to do.
Is that your assessment too, Steve? Is it a move in the right direction? And if you could bring in their Africa focus. So they were one of the first South African corporates to have expanded in Africa, and it looks as though they are now redoubling those efforts.
Well, absolutely, and I don't think it's the end of the story, and it might be, for a laugh, worth recounting what Lex said, the Financial Times columnist. The story about this deal was headed advanced retreat, and they commented on the deal along the lines we've been discussing, and then terminated by saying, and maybe one fine day they'll sell this wonderful investment and retreat to Cape Town.
Is that likely, Steve? Because I remember at the time the relocation of the head office to London, very controversial, and probably still is in many respects. If you speak to some of the South African legislators, regulators, policymakers, some unhappiness about this, and other South Africans. Is London, will it remain the hub for them?
If you ask them, they'll say yes. But obviously the plan is to build up the emerging markets, South Africa and Africa. And so it remains now, for the time being, they're very much committed to these 2 legs. But as I say, it's a very saleable business. Quilter Cheviot and the other businesses are very saleable, so they could, if they wanted to. Well, we would probably say it's an advance if they came to Africa.
Of course.
The English call it a retreat.
Mia, the advance in Africa, across Africa, the march by Old Mutual. So Julian Roberts has said their efforts are particularly focused on Nigeria, Kenya, Ghana. Is that likely to be successful? Many are struggling, and it might take some time to gain some comfort in these new markets.
Well, I definitely think it's something that won't just come off quickly. We've seen that through Africa. They're targeting big markets with a lot of people, where there's a massive room for growth, strong economic growth coming through in those countries. And we see other businesses that actually entered those countries that's doing particularly well from the South African point of view. So I think that they're in the right place. They're focusing on the right markets, but it's not something that just happens overnight. You need to find your way. There's a different culture in all these markets, and the one is just as different as the next.
So the EcoBank acquisition, clearly access to further earnings from the African continent. What about also helping Old Mutual with its expansion, bring the joint ventures, Steve, that we're always talking about that's required in new, fresh markets. So joint ventures with the knowledge being built up there on the banking side, helping Old Mutual with the insurance side.
Well, absolutely, but I mean the control of EcoBank is far from absolute, and so it'll be a long time before they have the kind of bank assurance advantages that say Standard Bank would have, and Barclays. So, but yes, it's a possibility.
Right. Mia, drawing all this together, it sounds what I'm hearing from both of you is a positive take on Old Mutual as a stock. So from your portfolio management perspective, how do you rate the stock, and how do you rate it compared with some of its peers that aren't all as internationally diversified as Old Mutual?
Well, we think it's a good company. We've always, liked Old Mutual. The fact that the price is actually trading quite a little stretched at the moment. It's not particularly expensive, but I wouldn't call it cheap either. When you look at the longer term valuation against itself, it's probably not on the cheap side, but none of the insurance companies really are at this point. So it's been a sector where many investors have actually piled into now in the times where they didn't really find anything else to buy, and the companies have performed well. Over time, over years, the company has added around 15% per annum for shareholders. It's not something that we would be looking at this stage, but it is a company that we always keep our eye on.
Steve, your approach to Old Mutual as a stock?
Well, first of all, the contrasting strategy, which we've discussed with Sanlam's of staying with the emerging markets, Discovery developed markets with a very different set of products, and as far as valuation is concerned, they're de-emphasizing market consistent embedded value, but it's still trading at around that at the moment, so it's not particularly expensive.
And relative to its peers, would you be buying it or a Sanlam or a Discovery or an MMI or a Liberty even?
I think I'd prefer something with a more clear-cut strategy rather than this straddle situation that we have with Old Mutual at the moment. But certainly it's worth keeping an eye on.
Steve and Mia, thank you very much for your insights. Good talking to you. That was Stephen Meintjes from Imara, Reid and Mia Kruger from Kruger International, talking to us about Old Mutual's most recent acquisition, a wealth management business in the UK. And from me, Erica van der Merwe, and the whole Deal Flow team, it's goodbye for now.